Brace yourself for a potential market pullback. Welcome to the Daily. My name's Jessica Amir, a market strategist with Moomoo. Well, the Bank of Japan's interest rate decision is ahead. Apple's earnings are coming up, and bad news could rattle markets that are now on shaky ground. In after-hours trading, we saw Microsoft shares. Critically, they're important because they're the world's biggest company, the biggest in the US. They fell over 4%. Meta shares down 3% after hours. And most of the companies in the S&P 500 are also in the red, signaling a potential pullback on Friday in the US. So what happened? Well, Microsoft reported better than expected earnings, and that included 34% revenue growth in its cloud computing unit called Azure. But guidance ahead was a little soft. They're only expecting 31 to 32% revenue growth for that key division next quarter, and that spooked investors, and that's why its shares were lower. Meta, their revenue rose 20% year on year, so it looked like good news from the outset. It was slightly better than expected, 1% better than expected, mind you, but their guidance for the quarter ahead was disappointing, and that's why their shares fell after hours. But there are plenty of profits on the table for those that have been invested in Meta. Of course, their stock is up 67% this year. Most investment banks still love Meta. They can't get enough of it. And most analysts have it as a buy. And that's, of course, given its strong earnings growth rates ahead. In regular trading, chip makers were hit hard. AMD shares fell 11%. SMCI tumbling back to January lows. It's down 33%, while Nvidia fell the least. That's because, of course, they've got business under lock and key with most of the Mag 7 names. Nvidia shares only fell 1.3%. So is it time to buy? Well, interestingly, some investors are already starting to buy the dip, but I do think we're going to have more pullbacks ahead. Here are 5 key reasons to consider. The VIX, or the market's fear gauge, has hit 20. This is its highest level in 2 weeks. The last time the VIX was this high, we saw the S&P 500 subsequently fall 6%. Also, secondly, consider its end of month profit taking, very normal around this time of year. Thirdly, consider the technical indicators are showing short-term momentum is now to the downside. So this is a reason that some traders will be betting further declines ahead. They'll be shorting the market and also taking profits too. The fourth reason is that we do have US rate cuts being lowered. Bets are being lowered rather. And that's because the US economic data is continuing to come out stronger than expected. We saw that overnight in the US. Tonight's PCE, remember that's the Fed's preferred inflation gauge. If that is hotter than expected, of course, that'll affect expectations and cause markets to take another leg lower. And also consider the fifth reason that markets are on edge, the Bank of Japan. If the Bank of Japan hints a hike is ahead, that will spook markets. Remember the last time the Bank of Japan rose interest rates, that caused tech stocks to tumble. Global stocks also fell globally. And so what else to consider? Well, the Aussie share market is down 0.2% today, but perspective, the Aussie market is now down for the second straight session. All in all, we're down about 3% from our record all-time highs. But the concern is the technical indicators are now suggesting more pullbacks could come for the Aussie market. But there's always a bull market somewhere. Getting to the detail, in the ASX 200, the best performer today, Mineral Resources, their shares are up 15%. And guess why? Well, Gina Reinhart's firm, Hancock Prospecting, said that they're going to buy MinRes's oil and gas permits for 1.1 billion Aussie dollars. I guess that's another sign that, people are trying to get their hands on gas, given ESG issues. We also have got JB Hi-Fi shares there. They were up 5% right before recording this video. Also important to note that we did have retail trade data out today by the ABS. Retail sales were weaker than expected on the month, but quarter on quarter retail sales rose in line with expectations. Other stocks making moves, WiseTech WiseTech shares have continued to recover from their sell-off. The technical indicators are now suggesting WiseTech could move higher. WiseTech shares are still down 15% from their record all-time highs. Meanwhile, consider watching Tesla tonight. They will be on watch, and that's because BYD last night announced stronger than expected EV sales. Yep. BYD is now selling more EVs in sales and dollar terms than Tesla, and that's for the first time ever. Also, keep a watch on Apple. Of course, their earnings, but their guidance is really important. If it's positive and stronger than expected, that could help markets move higher. For long-term investors, though, there's going to be plenty of potential dip buying opportunities. Consider this bigger term. The US earnings season has been pretty hot. Profits, quarter on quarter, they're now up 10%. And this is far better than the Aussie share market's ASX 200 returns and also the Aussie share market's total yearly quarterly profits, which actually fell last earning season. Also, keep an eye on the Bank of Japan and Apple. As we've just said, plenty of dip buying opportunities may be ahead. Also consider if the market does pull back, like the indicators are suggesting, which we've covered, markets will probably rally up. Considering that every single dip that we've had over the past 2 years, markets have recovered. Also keep an eye on gold. Yes, it's holding at that brand new record all-time high, and so too is Bitcoin, while Bitcoin is slightly lower. And that's the daily.